And welcome back. It's Jason Walty here, and thank you so much for joining me in today's video because, of course, I have a lot to share regarding the latest trends we're seeing right now in the U.S. housing market. I want to make today's video based on Redfin's latest housing market update that was posted late last week, and they reported a big change in the average monthly housing payment because mortgage rates decreased big time the previous week. So I have a lot to share regarding that. I'm going to be sharing how this is impacting current buyers right now, but also, because rates have been more or less doubled since January 1st of this year, a lot of home buyers are facing headwinds right now. I'm also going to be sharing a lot of early indications of home buying demand as well toward the end of this video here. So anyways, I have a lot to share in today's video. Let's go ahead and dive right in. And Redfin reports here the fastest mortgage rate drop in 40 years saves home buyers only $100 per month. This is a report that was posted on November 17th. It says here, last week's better than expected inflation report led to the biggest single day mortgage rate drop on record and the largest weekly drop since 1981. So average mortgage rates had the biggest single day drop on record and the biggest weekly drop since 1981. Rates declined from 7.08% to 6.61% during the week ending November 17th. And this, by the way, are rates according to Freddie Mac. But have a look at this, because here are rates according to the Morris News Daily for people with exceptional credit, of course. So have a look at this. Before that inflation report was released, which showed slower inflation across the United States, average mortgage rates were at 7.22%. on average nationwide. The next day, rates plummeted by 60 basis points to 6.62%. So that was a giant one-day decrease in mortgage rates. One thing I do want to note is that mortgage rates have been more or less flat at 6.6% ever since November 10th of this year. As you can see right here, rates have been more or less fluctuating about 6.6 to about 6.4%. And going back to Redfin's report here, they talk about this decrease in rates that we saw in the previous week and how that's impacting current home buyers. It says a home buyer on a $2,500 monthly budget can afford a $380,750 home with today's 6.6% rates, giving them $12,000 more in buyer's purchasing power. But check this out, because that same home buyer could have bought a $368,750 home with last week's rates at 7%. So because rates decreased by 7% down to 6.6%, that caused a $12,000 more in buyer's purchasing power, going from approximately $368,000 up to $380,000. They actually have a really good graphic showing how the changes in rates affect home buyers right now. So again, look at this. For someone with a $2,500 budget, let's look at rates at 3%, because average rates back in 2020 through 2021 was approximately 3%. So if you want a housing payment, which by the way assumes a 20% down payment and 1.25% in property taxes and 0.5% for insurance and no HOA dues. So this really is inclusive of principal, interest, taxes, and insurance. Anyways, at $2,500 per month, back at a 3% rate, which again is back in 2020 and 2021, you could afford to buy a $517,000 home, $517,500 to be exact. But fast forward today, instead of a $517,000 home, right now at rates at approximately a 6.6%, you only can afford a $380,750 home. In other words, that's a decrease in their buyer's purchasing power by $137,000 because rates increased from about 3% now to approximately 6.6%. And this is one main reason why I believe our housing market's slowing down, due to a lack of housing affordability. Let me give you one more example, because let's assume someone has a budget of $3,500 per month for a mortgage payment. Back in 2020 through 2021, when rates were approximately 3%, you'd be able to afford a $724,500 home. But fast forward to today, look at this. At 6.6%, you only can afford a $533,000 home. In other words, in a span of about a year or two, that's a decrease of approximately $200,000. And according to Redfin's deputy chief economist, Taylor Marr, he had this to say. The historical drop in mortgage rates is a tick in the good news box for the housing market, as lower rates deliver an immediate win for prospective homebuyers. Until we see more consistent evidence over time of slowing inflation and a bigger, steadier decline in mortgage rates, we expect the impact to be muted. Now, you guys follow the channel, you guys all know that I don't necessarily always agree with Redfin's analysis, but Taylor right here is spot on, because we can't see just because rates decrease in one single day from about 7.2% down to 6.6%, and now rates are at low levels at 6.6%. This does not mean our housing market's going to be taking off. And on top of that, the Fed's going to be increasing rates further in order to tame inflation. In other words, we need a bigger and more consistent decrease in mortgage rates in order to cause a shift in our housing market more in the upward trend right now. All right, changing gears slightly, let's talk about some leading indicators of home buying demand. So potential things that could impact our housing market in the weeks and months ahead. For the week ending November 17th, mortgage rates declined to 6.6%. That's down from 7.08% from 1 week ago, the biggest weekly drop in more than 40 years. This is still more than double the 3.1% rates we saw 1 year ago, though. And again, this is based on a report from Freddie Mac that was posted last week. And they stated that mortgage rates tumbled this week due to incoming data that suggests that inflation may have peaked because it came down lower than expected here. While the decline in mortgage rates is welcoming news, there's still a long road ahead for the housing market. Inflation remains elevated, and the Fed is likely to keep interest rates high, and consumers will continue to feel the impact. In regards to the Fed increasing the federal funds rate, have a look at this. Here's investing.com. And they have what's called their Fed rate monitor tool. And the next Fed rate decision is actually on December 14th this year, the last meeting this year. And that is 3 weeks and 2 days from the time of this video, which is the 21st of November. So the street is forecasting by 85.4% probability that the Fed is going to increase the federal funds rate by 50 basis points. And of course, when the Fed increases the federal funds rate, that could put upward pressure on mortgage rates. And speaking of mortgage rates, have a look at this, because here's the latest rates we have right now, which is the 21st of November. Average 30-year fixed rate mortgages are at 6.64%, far below the highs we saw in the end of October, when rates are about 7.37%. But despite the fact that rates have been decreasing over the past week or so, compared to 1 year ago, rates were at 3.16%. In other words, rates have increased approximately 3.48 percentage points, or 348 basis points over the last 12 months. Another early indication of home buying demand is this right here. Mortgage applications actually increased 4% from 1 week ago, but were down by 46% compared to a year ago. This is actually a report I have not shared with you guys yet. This was reported on November 16th, which is last Wednesday. And this is for the week ended November 11th. And because Veterans Day was during this week, they actually made an adjustment here to their report here. It says the refi index, which of course is an index which shows the total number of people submitting applications for refis, decreased 2% from last week and was down a whopping 88% from a year ago. And the seasonally adjusted purchase index, which of course includes an adjustment because of Veterans Day, increased 4% from 1 week ago. However, though, look at this. The unadjusted purchase index decreased by 10% compared to the previous week and was down a whopping 46% from 1 year ago. And by the way, the current demand for purchase applications in order to buy houses right now is more or less on par with 2015's levels. So to briefly summarize this report from the Mortgage Bankers Association, their index increased slightly by 4% compared to 1 week ago, when including adjustment for Veterans Day. However, though, compared to 1 year ago, down by 46%. So that's one report I want to share with you guys. But here's another report that Redfin actually did not mention in the report here. And this is also from the Mortgage Bankers Association for October. And they state here that mortgage applications for brand new houses decreased by 28.6% compared to 2021 or October 2021. And compared to the previous month, which was September 2022, applications for mortgages to buy brand new houses declined by 13%. And the MBA also provided an estimate regarding new home sales for October. The US Census Bureau will report those numbers in about a month, or not a month, in about a week. And of course, I'll make a separate video once that is actually released. But according to the MBA, they are estimating that new home sales actually declined to the lowest pace since July 2022, the slowest annualized pace since July 2022. So their forecast for brand new home sales for October is at 598,000 units on a seasonally adjusted basis. And by my math, that would mean an 11% decrease on a year-over-year basis for brand new home sales in October of this year. So the MBA is forecasting for new home sales for October to decrease by 11% on a year-over-year basis. And also compared to 1 month ago, their forecast is also calling for home sales or new home sales to decline by 6.1% from September. And going back to Redfin's report here regarding leading indications of home buying demand, fewer people are searching for homes for sale on Google than this time in 2021. And according to Redfin, that's down by 35%. Fewer people searching for homes for sale on Google. Also have a look at this because Redfin's home buyer demand index was flat last week, but was down a whopping 37% on a year-over-year basis. Again, this index is a measure of requests of home tours and other home buying services from Redfin agents. And here's a chart showing their index over time, or at least compared to 2020 and 2021. The line here in red is for this year, again down 37% on a year-over-year basis for requests of home tours and other home buying services by Redfin agents. Well below 2021 as well as below 2020's levels right now. And yet here's another trend we're seeing right now that's showing a decrease in home buying demand because touring activity, which of course is touring of houses for sale by agents showing their home buyers, for the week ended November 13th was down 31% to start the year. If you actually look at the most recent trends though right now, it's actually worse than that. So have a look at this. This is according to showingtime.com. This is the most recent week we have right now is for the week ended on November 20th. So have a look at this. For the week ended November 20th, touring activity is down by 35.4% compared to the first week of this year. Compared to last year, we were actually down by 4% compared to the first week of 2021. And again, something worth noting that back in 2021, we didn't get into negative territory until we hit November 18th. In other words, fewer home tours in November 18th of last year compared to the first week of 2021. But this year, entirely different because we've been more or less in negative territory ever since right there. July 14th. Fewer real estate showings compared to the first week this year ever since July 14th. What's pretty remarkable regarding this trend, fewer real estate showings across North America compared to the first week of this year, is that we have far more houses listed for sale right now compared to last year. The most recent updates we have from Realtor.com as well as AltosResearch.com, they are both reporting gains of approximately 45% compared to 1 year ago in the number of houses for sale in the US. So despite the fact that housing supply is up by 45% on a year-over-year basis, home tours are down approximately 30 to 35%. On top of that, according to the National Association of Realtors, they just released their Central Lock Home Showings Report for October. And here's what they noted here. And these are basically home tours by real estate agents showing their houses to home buyers. So on a national level, Central Lock Home Showings, which by the way, Central Lock is a lockbox systems company here, their home showings were down by 23% on a year-over-year basis nationwide in the US. Showings declined in every region as well. The Northeast, home showings declined by 58% compared to 1 year ago. The Midwest down by 36%, the West down by 22%, and the South decreased by 11% compared to October 2021. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. I hope you guys have an awesome day, I look forward to seeing you on the next video.